Hi everyone, this is Lucky Murugesh with the Lucky Finance Channel. I've got a very interesting topic today, which is to take a look at some of the top biotech and healthcare stocks. I've listed some of these stocks over here. We're going to look at AbbVie, Bristol Myers, Regeneron, Gilead, Biogen, Vertex, Amgen, and Abbott Labs. So stay tuned. And thank you for your time. So quick disclaimer, I'm not a financial advisor and all the information I provide is purely for informational purposes only. Please consult your own financial advisor and remember that investing in stocks is risky and you need to fully understand the risks involved. So what I'm here to do is provide you with information that you can take, do your own research, and you can gather the knowledge that you need, which eventually will lead to wisdom. Thank you. Some of you have seen my earlier videos. This is a simple 6-step process. We start out with step 1, looking at the earnings and the dividends for the current year. Then we review the estimated 5-year growth rate for earnings and dividends. We also look at the PE and the PEG ratios, and then we calculate the earnings and dividends in 5 years, and from that we estimate the future stock price in 5 years. And then we also come up with a target buy price. Okay, now I will take you through each of these steps in detail. So step 1 for the current earnings and dividends, and most of this information is available online. 2 sites that I use are seekingalpha.com and TD Ameritrade. But I've listed the stocks here. I've also listed out the 2020 earnings per share as well as the dividends per share. You can see AbbVie has earnings of $10.29 a share and dividends of $4.72 for 2020, and so on and so forth. So Bristol Myers, Regeneron has very strong earnings of just over $27 a share, but no dividends. You can see Biogen has a lot of earnings, over $33 a share, but again, no dividends. And then if I go down this list, you've got Amgen, which has pretty strong earnings as well as dividends. Okay. In step 2, we now look at the 5-year earnings and dividend growth rate, and this is from the site finviz.com. And if you look at the earnings growth rate, you can see for Vertex, the earnings growth rate is tremendous, almost 24%. And then at the other end of the spectrum, you've got Biogen, which has an earnings growth rate of less than 1%, which is really poor. And then on the dividends growth rate, you can see obviously some stocks don't pay a dividend and there's no dividends growth rate, but certainly in the future, it's possible that they may pay a dividend over the next few years. But you can see some of the stocks like AbbVie and Amgen have very strong dividend growth rates as well. 20.8% for AbbVie and almost 19% for Amgen. The next thing we do is we look at the forward PE, which is the price to earnings ratio, and also the PEG ratio, which is the price divided by the earnings growth. And if you look at that, you can see the forward PE for these stocks. Most of the healthcare stocks and the biotech stocks have PEs that are kind of somewhere between 8 and 20, and you can see the range up here. You can see Vertex has a much larger PE ratio of about over 25 right there, so that's kind of the standout there. Regeneron, which also is a very innovative company, has a reasonably higher PE than the others at 19. If you look at the PEG ratios, again, you see a pretty wide spread. You can see Gilead has a PEG ratio of over 10, which is just really high. Same thing with Biogen. But you can see some of the others like AbbVie are somewhat reasonable, 1.6 and 1.99 for Vertex. Now, typically a fair value PEG that I would use to target a buy price is around 1.0 for most of these stocks, and maybe around 1.3 for some of the high growth stocks. Okay, let's move on. Let's talk about the earnings and dividends in 5 years. So the way you calculate this is a fairly simple calculation. You can do this on a scientific calculator or an Excel. You take the current earnings, so 2020 earnings or the current dividends, and then you multiply by 1 plus the earnings growth rate divided by 100 raised to the power of 5, because we want the number in 5 years. Same thing for the dividends. You take the 2020 dividends, multiply by 1 plus the dividend growth rate divided by 100, and then raised to the power of 5 again. So if you do that, you get earnings of $16.80 from AbbVie plus dividends of $12.14. So the total earnings plus dividends is amazing, $28.94 a share. That's a really high number. As I go down this list, you'll see Regeneron is over $40. Biogen, actually, because there's no dividends, almost the same as the earnings, so 34.5, and then Amgen $35, and Abbott actually is about $6.70. Just a quick reminder, if you like this video, please hit the like button, please subscribe, and also hit the bell icon. Thank you for your time. We now get to the 5-year stock estimator. So this is really interesting. So based on the calculation that the 5-year stock price is going to be the earnings plus the dividends in 5 years, multiplied by the forward PE ratio, multiplied by the fair value the PEG ratio that you looked at in a previous slide. So based on that, AbbVie, my predicted stock price for AbbVie 5 years from now is 239, and the current stock price is about 92. Bristol Myers 131 and 57. Regeneron just over $1,000 a share, and it's about close to $600 right now. For Gilead, it's about 137, and they're about 73 right now. And then Biogen is 348, and they're at 283. Vertex, again, amazing growth, 846, and they're about 264 right now. Amgen at 482, and they're at 219. And then finally Abbott at 169, and they're at 88 right now. So if you take these numbers and you calculate the 5-year gains, you can see the gains pretty significant for AbbVie, 160%, and Vertex 220%, Amgen 120, Bristol Myers 129. And then for Biogen, you see the gains are not that great, over 5 years, 23%. If you take that number and divide by 5, you get an annualized gain, which is again very significant for AbbVie, for Bristol Myers, for Vertex, and also for Amgen, and really not that impressive for Biogen, only at 5%. So what is your target buy price? Now, most of these companies look quite attractive, as you saw, even at current prices, except for Biogen, which only offers about a 5% annual return. I try to target at least a 25% return a year for the risk that you're taking. And so here are the target prices I recommend. So to get at least a 25% return, you should buy AbbVie at $106 or below. The good news is AbbVie is actually below that price. It's at 92 right now. And in fact, it could even go down to around $80 if the stock market continues to fall over the next month or two. So you might be able to snag AbbVie maybe in the $75 to $80 region. And I think this is going to be a really amazing buy. For Bristol Myers, a good price would be 58. Stock's actually just below that today. It just hit lower today at 57. You might be able to get this maybe around $50 or $52 on a really bad day in the market. So that's what I would target. For Regeneron, the target buy price would be 446. The price is well above that at 596. So you're going to have to look for at least a 20-25% drop in the stock price if the market goes down. And for Gilead, I think you should be targeting probably another 20% price drop from where the price is today. And a good buy price would be around 61. For Biogen, the stock is very overvalued, and I think you should be looking to buy it at about $155 a share. Right now it's about $283, so I think the stock is just way overpriced. Vertex actually is reasonably priced. The current price is $264, and a good buy price would be below $376. So, and this stock actually has gone all the way down to close to $200 in a really bad day in March. So you might be able to get it maybe around $230, $220 again if the stock market goes down over the next month or so. Amgen is close to its target buy price. I would wait for a price closer to maybe $200 or maybe even a little bit less than that. And then for Abbott, the target buy price would be 75. The stock's at 88. So I would wait for a price below 75, maybe in the around $65 to $70 range. What are the risks you need to think through? So some of the risks for healthcare companies, they are very heavily dependent on government programs. They're also dependent on subsidies and, most importantly, the political climate. And this is an election year, so certainly there's going to be a lot of political action going on. Most of these stocks are subject to drug pricing caps, compliance regulations, things like that. So that could certainly affect the stock price. There are also additional risks from telemedicine because of COVID, where the doctors, because of controls in place, the doctors cannot prescribe everything online. And so maybe for a period of time until they can actually go into the doctor's office, maybe doctors cannot prescribe everything. So maybe they might be a little slow in terms of number of prescriptions. Some of the risks exist also from IT hacks of the patient's records online, exposure to online payment scams, things like that. In terms of biotech, these companies face a lot of risk because of the long approval cycles for new treatments. It could take 5, 7, 8 years for an approval cycle. Lots of pressure again on the drug pricing. They have to raise a lot of capital initially for R&D projects. Some of the numbers we've heard are it takes $1 billion at least in terms of R&D to create a drug that has a potential significant impact to a company's revenue. There could be issues around product development and trials, things like that. They also face risks from regulatory compliance, IP protection, things like that. Okay, but given all of that, I think in terms of conclusion, I think healthcare and biotech really offer a tremendous, I would say, potential to participate in the upcoming graying of America. People are getting older, not just in America, but across the world. And so more and more people are going to be depending on drugs and biotech innovations. They also offer great opportunity for innovation and pricing flexibility. I think, if somebody's sick, and you're charging them, I don't know, $100 a day in drugs, I think for the most part, they will find a way to pay for it. Now, that's where the government controls and the regulations come in place. But in general, their pricing is pretty strong. I think every portfolio must include some representation from healthcare companies and biotech, maybe 5 to 15% of your portfolio. And out of the companies that we reviewed today, AbbVie, Bristol Myers, Vertex, and Amgen, I think offer the best potential over the next 5 years. I would wait for Abbott Labs and Gilead to pull back 15 or 20% before making any investment in those companies. What's happened is because of the COVID situation, those stocks have already risen pretty significantly in 2020. So you're going to have to wait for at least a 20% pullback. So once again, thank you for your time. If you like the video, please hit the like button. Please hit the subscribe and the bell icon so you can stay up to date. I try to post at least one video every week, sometimes two. And again, thank you so much for your time. I really appreciate it.